Now, before you even start filing your taxes, you need to find out what your filing status is. Your tax bracket, tax credit, standard deduction, the amount of exemptions, they all depend on the filing status. Simply put, it can save you money or do the opposite. So you may want to be very precise about this. So before we break down all the filing statuses, I'd like to go over a couple of key terms we'll be discussing here. First of all, the tax bracket. That's just the rate at which you're being taxed at. Nothing more important. In general, more you get paid, more you're taxed. Exemption. Now, you can deduct certain amount of money from your taxable income for every person you have on your tax return, including yourself. That's the exemption. The base amount is $4,050. We'll cover that later. Standard deduction, that's the maximum amount of deductions you can report on your return without having any written proof. You don't really have to keep all the receipts anytime you launder your uniform. In general, it's generous enough for most of the people to use it, so unless you have like mortgage interest, you had like high medical bills, you'll be fine with using standard deduction. So both exemption and standard deduction, they are deductible from your taxable income, so they reduce the income that you're taxed. And also the word dependent, generally it's someone you support, so someone you provided more than half of the support. It takes more than just supporting someone, we'll cover that later, but just to get the general idea, that's what a dependent is. Now, you can file a single. If you're married, you can file a joint return with your spouse. You can file separately, and we'll cover why you want to do this. You can file as a head of household if you have a dependent, and you can file as a qualifying widow. Hope this is not the case for you, but in case if it is, it's good to know your options here. Now, single, that's the easiest. If you were not married or you were divorced on December 31st of the year you're filing your return, 2017 in this case, you file as single, and if you didn't have any dependents, then you file as single. Well, you get the base $4,050 exemption just one times, and you get $6,350 of standard deduction. So that's how it looks on Form 1040. You're just gonna check single and then exempt yourself and then put one in a box on the right hand side. Now, if at least one of the spouses is a US resident, you can file a joint return. You must be married on the last day of the year you're filing a return for. If you were widowed the same year, you can still file a joint return. Or if you divorced, you may still choose to file a joint return for the year you divorced, but make sure you both agree. You don't want to be in a situation where you file a joint return with your spouse and then also your ex-spouse, and then your ex-spouse also files another return as single for him or herself. So make sure you both agree on it. Now, in this case, you get at least 2 exemptions for yourself and your spouse, so $8,100, 4,050 times 2, plus the dependent. If you had children, you can claim them as dependents and get exemptions for each of them. And then the standard deduction is $12,700, so twice the single one. So now this is how it looks on the form. It's you put your spouse's information, and then you're gonna mark the second box, check the second box. 6A and 6B, they will both be checked, so 2 on the right hand corner. Also, let's assume they have like one child, their daughter, so they get one more exemption, so total of 3. Now, married filing separately, in general, this is not what you want to do because you lose many credits, your standard deduction is less than if you file joint return, but there are a couple of cases where it actually does make sense to file a separate return. And the most common is if one of the spouses is a non-US resident and you file a separate return in order not to report their income they made overseas. So let's say Jenny's husband is a resident of China and he made $50,000 in 2017. If they file a joint return, they would have to report those $50,000 on their tax return and pay taxes out of that. However, if they file a separate return, Jenny would only pay taxes on her income, and Jenny's husband, since he wasn't a US resident in 2017, doesn't owe any taxes on his income not related with the United States. Also, another reason could be if you don't trust each other, because if you file a joint return, if you're filing a joint return, you're assuming all the responsibility for yourself and your spouse. So if you're in process of separation or for any other reason, you don't trust each other, then yeah, you just file a separate return. You only get one exemption plus the dependents, $4,050. Your standard deduction is $6,350. And the other spouse cannot itemize his or her deductions. So you have to either both itemize or both take the standard deduction. That's how it looks. You're just gonna check the third one, and well, if your spouse was a non-US resident, you're gonna put the name like Mark, and then NRA, that stands non-resident alien. Head of household. So if you're not married, you can still get a better filing status than the single one. You must have a dependent or a qualifying child or relative. Let's see what that means. So for a qualifying child, it doesn't have to be your child, your biological child. It also includes your siblings, children of your siblings, foster children, adopted children, stepchildren, stepbrothers, children of stepbrothers, and so on. So as long as they are younger than you, as long as they are under the age of 19 or 24 if a full-time student, also if they're disabled, then the age test doesn't apply. If they lived more than 6 months with you, we don't count the temporary absences like school, vacation, and so on. So basically, they lived mostly with you during the year. And then you provided over 50% of support. So let's say your younger brother lives with you, he's a full-time student, he's 22, you pay his bills, so you can claim him as a qualifying child, even though he's not your biological child, he's only your brother. Now, if you don't have a qualifying child, you can still file as a head of household if you have a qualifying relative. It's someone that lived with you the entire year, not just 6 months, not counting temporary absences, earned less than $4,050, and you provided more than 50% of the support. In most of the cases, that's like your girlfriend or your boyfriend. You're not married yet to file a joint return, but you paid their bills, so you can claim them as qualifying relatives. However, when we're talking about your like parents, grandparents, siblings, other relatives like in-laws, they don't have to live with you. So if you support your parent, if you provide more than 50% of their support, even if they don't live with you, you can still claim them as qualifying relative and file as a head of household. And you get one exemption, $4,050, plus your dependents. Eventually you get at least $8,100 because you would have one like dependent in most of the cases. Your standard deduction is $9,350, and this is better than $6,350. And this is how it looks. You mark box number 4. You can only exempt yourself because you're not married, so don't mark 6B. But then you can also, let's say Jenny exempts her daughter and also her father that she supported. So total of 3 exemptions, not too bad. And the last one would be qualifying widow. Now, again, I hope this hasn't happened to you, but however, it's important to know, if in case if it did, it's good to know what your options are. You can still get all the benefits of a joint return during 2 years after the year of the spouse's death. If you have a dependent child and you did not remarry, if you married someone else during those 2 years, then you have to file a joint return with your new spouse. Now, let's say your spouse passed away in 2017. For 2017, you can still file a joint return. It happened the same year, if you remember in the beginning what I said. For 2018, you can file as a qualified widow. In 2019, you can also file as a qualified widow. For 2020, the most you can do if you didn't remarry is head of household if you still have the qualifying child. So it's either single or head of household. However, you no longer have the option of filing as qualified widow. Now, very important, you can't exempt your deceased spouse. So you only get one exemption, you don't, plus your dependents eventually. But your standard deduction is set to $12,700, just as the one with married filing jointly. And that's how it looks, pretty self-explanatory. Again, do not mark 6B, just 6A and then your children.